Right on to another top management voice. Jamshed Cooper, CEO and MD of Heidelberg Cement, now joins us to talk about their Q4 performance. Mr. Cooper, thanks a lot for coming on board. If you could start with telling us what led to this such a strong performance in the fourth quarter, and what did the company do differently versus the sector at large?
We are doing nothing much different as far as the industry is concerned. Yes, that's all I can say that we are managing our portfolio well in terms of our costs and our reach to the market. That is what is important, and that's what we are doing right, probably.
Okay, yeah, you certainly are, because it's been a strong quarter, Mr. Cooper. Congratulations on that. Let's talk about the consistency with which the company has managed to move its operating numbers. You've reported one of the lowest operating costs amongst peers. Are you confident that this will be able to continue?
Basically, we are looking at every cost. We are in a very dynamic mode. Most of the time, we are looking at costs on a day-to-day basis virtually, whether it is sourcing of raw material, or it is mining operations, or it is power cost, or sourcing of power from the grid or from the external sources, or whether it is your own generation. So these are the areas which we work on, whether it is fuel costs, mix of fuel costs, logistics costs. So these parameters which we work on continuously. The team works very religiously on these aspects, and that gets us there to deliver a result which you can see, all of you can see that.
There was an aggressive volume push strategy adopted pan-India by the cement majors in the same markets where you operate as well. Despite that, could you tell us how there's been a sharp jump in the company's realizations despite the aggressive competitive environment?
You are right, very right, and the brand strength in central India is relatively good, and I would say that the customer preference for our brand is growing year after year, and we hope that this will, and basically our target is to remain in a premium brand and exceed our premiums whatever we have today also.
Okay, what was the utilization levels, and do you see them going up from here on, which means there will be, of course, a further increase in margins too?
You are right. In terms of utilizations for the quarter, we were around 90% utilization. On a year-wise basis, it was 85. So that does give us a strength in terms of economies of scale is concerned. Going forward also, we are looking at maintaining a higher capacity utilization, and that has its own strength. It has its, when you plow back, it goes into various cost elements, and when you are operating at a relatively higher production levels. Basically also we are in a 100% blended cement market, so, and we also produce 100% blended, so that also gives us a lot of strength.
All right, Mr. Cooper, we'll let you go on that note, and wish you all the very best for the future that lies ahead for the company. Let's head